Hello everybody. How's it going? Good morning, good evening, good night. Welcome to a Capital Hungry London analysis stream and trading session. It is currently Wednesday morning, May 26th, 2:20 a.m. Eastern. Just 20 minutes into German market open with 40 minutes until London open. Could I get an audio and visual check from the YouTube Capital Hungry Hyenas, as well as the private chat Capital Hungry Lions? How's everybody doing tonight? We might have some trolls trying to shut down the stream again by spamming child pedo shit in the chat, but hopefully they leave us alone, you know what I mean? All right, hopefully everybody can do me a favor and take a simple minute to go read through the stream description. And we're also going to be going through some of the nitty gritty right now that a lot of people seem to ignore. Okay, you can see all the information on the YouTube layout itself, as well as the stream reminders on your screen and the description. But this is not financial advice. Feel free to ask questions about technicals, fundamentals, and overall financial markets. Do not ask for direct signals. Any questions about the Capital Hungry private service, please keep that until after the stream, as we're just primarily focusing on giving value, information, news, and analysis regarding the markets. You have all of the Capital Hungry free resources at your fingertips, linked multiple times within the description, within the stream layout, within the stream reminders, and listed out in front of you. The news Twitter, the free Telegram analysis channel, my Telegram contact, as well as the YouTube channel and everything else there. Okay? Please understand that the question and answer phase, just save that for after when I go through all of the analysis, because we have the same systematic process when we do these streams. We go through our nitty gritty stream reminders, which is really irrelevant to our trading process. But the main part is we go into our mental reminder and psychological reminders. Then we understand what economic events we have and fundamental points that are active. Then we go step by step through analysis from gold, GJ, GBPUSD, Euro USD, USD CAD, and US 30. All right. Then we look for potential trade ideas using fundamental and technical analysis, identify price points of interest, and if we get the confirms we need based on our preset analysis and lower time frame price action confirms, we execute for scalps and potential intraday trades through this webinar. After we go through the analysis, after we go through that entire process, then feel free to ask questions. Ask me about whatever questions you want, you know what I mean? But at least let me have some patience, as this stream is going to be running until Asian session close, which is 5 a.m. Eastern roughly. So just let me go through my process and give as much information as I can, you know what I mean? Okay, so make sure you guys check out the Capital Hungry YouTube channel itself, where you have tons and tons of educational content across fundamental concepts, technical, and trading psychology, the Capital Hungry News Twitter, and the Capital Hungry free Telegram analysis channel. Make sure any hyenas that are going to be coming in after London Open, begging for trades. Oh, London's open, 2 minutes in. What are you guys, GJ buying, GJ selling? GJ, what are you guys doing? Both? Don't worry about them. Fuck all those people. Let them know they can always rewatch the stream and rewind it as well. They can just rewind it, see our analysis, because the people who are actually looking to learn, they come when the stream starts. That's when we're putting the actual work in. That's when we're doing our analysis, looking at what we're looking to execute on, and then the rest of the 2-3 hours, we're watching price action. We're waiting for our execution points. We're answering questions. We're looking at news. We're looking at economic events and so forth, right? Because you're going to see a lot of people come after London session open, an hour into London session saying, what, GJ up, GJ down? Oh, what are you guys doing? What are you guys, Bitcoin? Anybody in whale coin to the moon? Sun coin? And then they go crazy, and it's just a bunch of noise. It's just a bunch of vultures and hyenas. You know what I mean? Looking for scraps. You don't want to be looking for scraps in the market. You want to be patient, hunting like a lion. Do you all know how lions hunt versus how vultures or hyenas hunt? Lions are known as the alphas, right? Top of the food chain. Well, they don't spend all day, all night constantly running around looking for food. They're primarily resting, conserving their energy, and when it's time to hunt, they hunt in a pack and plan their attack. They'll literally corner off their prey, have a few lions chasing it one way, the lioness coming and cutting it off another way, and then they have a plan of attack. They conserve their energy as efficiently as possible and rest. Only hyenas and vultures are constantly looking for scraps, hunting all day, all night. And they don't get respect. Right? Okay. Now, mental reminders. Capital Hungry private channel. You guys all obviously get your psychological reminders with every session open and close alert and at the start of the week. But for the YouTube audience, remember, we are manual traders. Our job is not only just to do analysis technically and fundamentally. At the end of the day, if you are a manual retail trader, it is inevitable that you will take losses. It's inevitable that you will not be 100% focused all the time, and it's inevitable that emotions will get involved. So we have to put just as much time, attention, and effort into mastering our mentality and emotions and making sure that we have rules and guidelines regarding our trading. This will lead to having as much control in our trading as possible, removing out any external noise variables, and being able to collect a lot more data around our trading, following a structured, almost business plan, which is your trading plan. So stay smart, follow your trading plan, follow your risk management plan, because trading is a game of probabilities and mathematics, essentially, not about being right or wrong or about ego. Okay? Focus on your long-term vision. What I mean by that is, nowadays with social media, with what we are constantly marketed to, as all of us are just falling victim to this disease of consumerism, people are constantly chasing, even outside of trading, short-term satisfaction. Whether it be alcohol, drugs, junk food, watching some mindless entertainment on Netflix, scrolling on social media, impulsive trading, over leveraging. It's all just through the pursuit of that short-term dopamine hit to give you that temporary satisfaction that we know never lasts. We don't want to mirror those behavior patterns and emotions in our trading. Okay? So there's that little mental reminder. Now, May 26, 2021, for economic events, we have already had through late Asian session NZD interest rates, right? New Zealand pushed up on the interest. New Zealand dollar, pushed up on the interest rates because they're still more and more optimistic about economic recovery in the short term. We're seeing more central banks are starting to wave off from potential further stimulus and are more focused on the economic recovery and potentially tapering off stimulus, which is going to have a major impact to market sentiment over the next month or two. Other than that, for our London session and Euro session overnight, we don't have any economic events to focus on as per data reports. But we obviously have reactive headlines and news that is always active in the markets. So to the left of your screen is the news terminal where we have updated news in real time. We haven't had really anything too crazy. We did have some short-term weakness in the Japanese yen from Bank of Japan comments, but nothing that is impacting the overall market sentiment or fundamentals. But besides the economic events, besides the reactive news headlines, we also as traders have to understand market timing. For any of you who want to go do a quick little Google search, we currently have sell in May, go away, which is in effect. This is a historical repetition of the 6-month cycle change from May to June as you go and change another quarter, where historically investors have been known to sit on the sidelines, profit take, and wait for cleaner volatility in the summer months. We're seeing something very similar with the consolidations and ranging we've seen primarily through May, and especially as we're coming towards the end of the month. So a monthly candle closing, potential end of month rebalance of flow moves, and obviously this is the last business week for the month of May. That's why we've seen a bit of ranging on some of our currency pairs, and that's why we've seen a bit more indecision, but our overall bias is still holding very active. Other than that, we do have central banks across the board discussing tapering. For those of you who don't know, tapering is just a fancy word where they're talking about, okay, the economies are starting to recover now. Our financial stimulus and printing of the dollars, interest rate cuts, quantitative easing has helped out. Now we're going to look to slow down that stimulus or potentially cut it off and even start to increase interest rates. We are getting the signs of that. We're also getting signs of Middle Eastern tensions rising with the U.S. intervention soon to come, and pandemic fear starting to simmer out of the market, and the focus coming back to trade wars, political issues, Middle Eastern conflict. Overall though, macro market optimism is still very much active. How do we confirm macro market optimism is still very much active? Well, there's a few tools we can use on an economic standpoint, which is by looking at global stock markets, which are either doing two things: sitting at all-time highs or consolidating at all-time highs towards the end of May. Right? So when you're looking at your stock markets across various regions, they're all following that continued central bank support, but we've seen a slowdown for the month of May in ranging at the highs with that historical repetition and that 6-month cycle change. Still, even with the consolidations you see on China markets, Japan markets, Dow Jones at the highs, UK markets, Germany, Australia, just as examples, you have to understand that these consolidation phases or slowdown or pullbacks are coming from all-time highs that were peaked. And we still have yet to break bullish market structure on stock markets across the board. So even though we're having this slowdown due to coming towards the end of the month and end of a 6-month cycle change, it's still nothing that's shifting market structure or showing any long-standing fear, uncertainty, or doubt. The only way we're going to see a massive sell-off or correction on the stock markets is if central banks start to actually execute with tapering or signal that interest rate increases, or we have any new mass fear, uncertainty, or doubts in the market that will be similar to the impact of the initial pandemic. But we haven't seen that. We've only seen economies open back up, cases recovering, and a flood of vaccine headlines, and economic data also rebounding. But the impact of this massive printing by central banks and stimulus has been an increase in inflation. This is one of the main reasons the US dollar is still bearish and gold has still been bullish in these economic conditions. But another way to confirm that markets are still fundamentally optimistic is the US dollar, the Japanese yen, and the volatility. While the US dollar and Japanese yen are safe haven currencies, the US dollar is your world's reserve business currency. Most international import and export business, exchanges of oil, bank-to-bank business is done in US dollars. So it's and even central banks have been known to follow suit with the Federal Reserve as well. But other than that, it's still relatively bearish as the demand of the US dollar has been low and the supply has been increased. Higher supply, lower demand, lower price. Supply and demand impacts anything: service, business, products, currencies, you name it. It's just basic economics. Japanese yen, which is a safe haven currency, even though it has been ranging on the intraday time frames, which has caused a lot of ranging on our Japanese yen pairs such as GJ, which we're going to notice, it's still very bearish, and this ranging has just been primarily at the end of May as we're coming to the month end. Volatility index, which is your fear and greed indicator of North American stock markets and takes the volatility reading from the S&P 500, is still very bearish, meaning market fear is low and investors are still optimistic. We've just had a slowdown in volatility and volumes due to the 6-month cycle change, as well as coming towards the end of the month and having such impulsive moves over the last previous months. You also have to understand that at the same time the markets are starting to consolidate and slow down is also the same time central banks across the board are potentially shifting their sentiment of how they want to approach economic support. Up until maybe a few weeks ago, central banks have been continuously just talking about financial stimulus. We're keeping interest rates low. We're still going to pump the economies. We're still going to provide that support, etc., etc. Until really the last week or two, where economic data has been heavily rebounding, but inflation figures have been heavily increasing. So now we've seen more talks about the central banks of tapering, potential interest rate increases in 2022 from like the Federal Reserve, as well as economic data rebounding and looking to combat the short-term increase in inflation. This potential sentiment change from the central banks, who obviously dictate the values of the respected currencies, is also causing investors to sit on the sideline and wait for a cleaner sentiment. Because until then, as they've said, we're going to pump the economies, we're going to provide the support, the investors and the smart money have been riding with that sentiment, meaning buy up the stock market, sell the dollars, sell the yen, economic recovery, financial stimulus is there, ride the wave with the central banks. Until this point, just conveniently coming to a 6-month cycle change, as we're coming to the end of month of May, we're having central banks potentially starting to shift their sentiment because what they did with the financial stimulus and support since the pandemic crash has worked. Yes, people lost their jobs. Yes, people are still locked down in other various countries, but the stock markets are almost 5,000, 10,000 points higher than pre-pandemic levels. Job figures are rebounding, economies have rebounded, consumer consumption was through the roof, etc., etc. So now they want to look to balance out the economy and start to balance out that money flow. The way that's going to come is from tapering off the stimulus support and also looking to start to raise interest rates again. Inverse that cycle. I know it's a lot of information I just said, but if you've been following along with other webinars, hopefully that makes sense so far. You get what I'm saying? Capital Hungry Lions, YouTube chat. Okay, so now when we're looking at gold, for those of you who've been following along any of our Capital Hungry analysis webinars, live chat, live trading streams, what have we been only doing on gold since these 1680 lows, and what is the fundamental reason why we have been continuing to buy gold? Have you guys, ever since the start of April here, have you guys saw me call out any gold sells within our trading streams, analysis, private chat, public chat? You can go watch any of the recorded streams. You can go watch any of the market updates. Or have we been only riding the continuation buys with the bullish market structure? The respect to the higher time frame bullish market structure at 1680, the shift out of bearish structure in the double bottom showing a lot more buyers momentum at 1680, and fundamentally increases in inflation, where we know fundamentally, when there's increases in inflation, which is an economic risk, it can lead to an increased cost of goods and really fuck up the economies if it's a large enough increase in inflation, which we've seen historically happen in enough countries over and over again. We know that this increase in inflation and oversupply of the US dollar leads to a weaker dollar, where we trade gold against the dollar, and also investors hedge against inflation by pooling into gold. Private chat. Should I tell them about the historical repetition from 2013 and the next major move coming? He's I didn't even get to say. I didn't even get to get it out yet. No, don't tell them. Too much information for them. I was about to tell the hyenas the next major move coming on gold, and how to dissect it, what to look for, and no, leave that. All right, fuck it. All right, fine. Sorry guys, Lions, the capital hungry private chat Lion said don't tell them the next major move coming, because I got, you guys have seen my predictions on the stock market, you guys have seen my prediction on Bitcoin, you guys have seen my prediction on oil, you guys have seen my call on the gold buys from 1680 down to up to the 1900s. I was doing some historical research, and I was back testing gold, and I was looking at the fundamentals, and there's another major move coming, and I know exactly why it's coming, and I know exactly what to look for. I wanted to share that with you guys, but private chat said no. So we're just gonna focus on the current sentiment, and let's just continue. Let's just continue here. These guys said no before I even got the question out. They're like, nah, no. I didn't even get to say it. They already knew. I was like, should I tell them? I was like, nah. All right. Don't worry. All right. Okay, anyways. Let's just talk about current analysis. Obviously, we've only had two things happen on gold with the respect to the bullish market structure. The continued financial stimulus, which would weaken the US dollar, as well as increases in inflation. So we had weaker US dollar, increases in inflation, a technical double bottom at 1680 higher time frame key level, and buyers only print continuous highs, have pullback phases, and that's it. You guys can't be mad at me, otherwise marketers are going to take it as a signal and say they told everybody. Take it easy, everybody. I'm about to give you guys good gold analysis for now anyways. Why are you guys hating, man? You know what, oh shit, the news bot is still active here. Yeah, Capital Hungry got a new crypto newsroom too. You guys don't know about this matrix shit. I just opened that by accident in front of you guys. Yeah, you guys see that? I'm a fucking hacker. No, but anyways. Okay, now let's just talk about right now. All right, let's just talk about right now. Everybody focus up again. Focus up again. Pretend that whole private chat thing didn't happen. Let's look at gold right now. With still having a weaker US dollar, with having buyers continuously print new highs, and having only pullback phases and continuations up, or consolidation phases and continuation up, is there still any reason for us to sell gold? Right? We just looked at the dollar index chart and we're still bearish. We're looking at the market structure, we're still bullish. The price action, bullish. Buyers continuously printing new highs. we only have pullback phases after we get new highs printed, or consolidation phases and continuations to the upside. Do you understand? So the fundamental confirms for continued gold buys. Interest rates are still remained cut so far from the Feds. Inflation is increasing, which we confirmed from the US CPI, which was as high as it was from 2008 crash levels. Market structure bullish, trend bullish, price action bullish. We're only seeing these phases. Understand? So now when we look at gold, what phase are we in? What have we just had happen? Buyers have just printed new highs after breaking out of this liquidity zone here. Right? Just because we printed new highs doesn't mean we're going to get a pullback. As we had this liquidity zone and order flow generated in the market, look at the price action we're seeing. Stronger bullish candles, weaker bearish candles, stronger bullish candles, minor bearish pullback on this new 4-hour candle, still respecting our 1902 key level. When I come to show you guys the lower time frame market structure on the 1 minute, and look at the key levels as well. You guys know the white lines are historical key levels based on yearly, quarterly, and 1 month price points. Right? You can see that when we're looking at the hourly price action, we're only having stronger buyers move or more consecutive bullish candles and just these minor bearish pullbacks and blips. Even right now, what I'm pretty much looking for is if we were to have candle closure breaks below 1902, pull back to 1897 buys, London Open pull back to 1902 buys, breaks above highs at 1907 buys. There is zero reason for me to even look for sells on gold unless we had these confirms. We would need US dollar strength overnight. We would need failures to break these current highs, and we would need a break and retest below 1897 for me to effectively take corrective pullback sells on gold. All right? Otherwise, look at this beautiful 1 minute structure I'm going to show you guys. And this is what we're going to be continuing to play. And look at the reaction at our key levels. Look at this shit. Look at this. Liquidity zones right at the key level. Bullish structure respect. Bullish structure respect. Buyers continuously printing new highs. We're just having a consolidation phase here. Bullish confirms and order blocks above our key levels. Even right now, we just got a pullback and retest to 1902 and almost already 40 pips up from our 1902 retest pre-London. Look at this beautiful lower time frame structure and price action. When I zoom in here, even if we broke below 1902, I would not sell. I would let the pullback take place to 1897, continue to take buys. If we get another double bottom at 1902, high risk, high reward buys. I'm also going to mark off these new highs printed because if we break above 1907, further buys. These green boxes are where I'm going to start looking at price action to get the confirms of momentum and lower time frame confirms for continued buys on gold. Everybody take a little mental image of that. If the US dollar is still weak, if we create a support at 1902, pullback failed to break above 1907, buys. with all the confirms I'm telling you guys, fundamentally and technically, from inflation to the bullish structure to the weaker US dollar to the trend, the price action. So there we go. I would only be looking for sells on gold if we break and retest below 1897, where we had this price sensitivity zone and liquidity zone that took us into new highs. It's also a higher time frame historical key level, and that would be breaking the bullish market structure and potentially creating corrective structure. I would only be looking for gold sells if we break below and break and retest below 1897 with US dollar strength. Right now, it is 2:50 a.m. Eastern. We're going to see how these hourly and 30-minute intraday candles close and how London sets up. And we're going to be patiently waiting for those execution points. This is my main bias. Buys. Areas of interest to watch price action: 1907.5, 1902, 1897. I'd only be looking for sells if we had clean breaks below 1897 with an hourly candle close below 1897 and then lower time frame retest to sell. And I need to see the US dollar bullish when we look at the dollar index price action, which we're going to keep it on the dollar 30-minute time frame here, and we're going to be watching the price action and movement of that. We have to be very cautious about the dollar because as we're coming towards the end of the month, what we have seen is every time lows are printed by sellers on the dollar, you do get these cat bounce pullbacks as sellers take profit, and you get retests to this bearish market structure. Okay, so what is the current positioning of the dollar? Is it in a pullback phase or is it at the new low? Right? So keep in mind, we have a monthly candle closing. We've just had sellers print new lows, historical lows in the dollar. So if we get bullish price action overnight and a pullback to 90 flat, that will give us a deeper pullback on gold as well. Because the US dollar is the world's reserve business currency. Keep this in mind. You know that common myth that they say, when you have a currency pair, the primary in that quote has more impact. Like, for example, if you're trading GBP USD, GBP has more impact than US dollar in that pair. You guys heard that myth, or a lot of technical traders talk about that, or they teach that to new traders? Hopefully you haven't, because that is false. It depends on the fundamental currency value. The US dollar, no matter if it's the primary or secondary in the pair, always has more strength unless there is a fundamental catalyst primarily impacting the other currency. All banks do their transactions in their currencies between other banks in US dollars. For example, let me show you guys this terminal here. So this is just an Asian currency's spot FX rate. Banks constantly updating their price rates every single millisecond, with banks across the world for different locations updating their buy and ask quote prices up to the second for every single currency to the left here. See here to the left, you don't see currency pairs. You don't see Euro JPY, Euro CAD. You see the currency primary side, and it's automatically assumed to be against the dollar. All these bid and ask prices are against the dollar. This CAD price is USD CAD's price. This Euro price here is Euro USD's price. The US dollar is the world's reserve business currency. Most transactions are done in the dollar. Internationally, import, export, business transactions, bank-to-bank transfers. and then convert it into the nation's potential home currency and exchange in that fashion. And you can see the locations of the banks, whether it's Hong Kong, London, New York City, Jakarta, Moscow, and what doesn't matter what contributor it is, whether it's HSBC, Reuters, Barclays, RBS, Santander. Their transactions are done with those currencies trading primarily against the dollar. Those movements within these currencies and transactions on a high frequency perspective and an algorithmic perspective are what shift the values of the currency pairs. Colombia, everything there. You know what I mean? So just that quick little lesson there. All right. Any private chat members take that 1902 bounce from the intraday trade ideas webinar that was sent earlier? That was a nice trade too, eh? Mark, you took it. Vig, you took it. Nice shit. Okay. So gold, everybody understand the analysis fundamentally and technically of what we're looking for on gold now. So because of that, we're going to move on to, we have 5 minutes until London session open. No rush. We're going to patiently let London open and see what confirms we get. And I'm going to move on to the analysis on GJ, GU, and these other pairs. Any questions about, any further questions about gold? Before I go on to GJ, everybody who's in the stream right now, make sure you like and subscribe. I'm not trying to be a cocky piece of shit, but who else is really giving you guys this much information on the markets, technically, fundamentally, on a retail trading perspective? Be honest. N7, that's a very good question. If you rewind this stream, you'll see exactly my opinion on current market sentiment. All right, so if you guys enjoy that, then make sure you guys like. It's always free to like, it's always free to subscribe, and it's always free to share. Doesn't hurt you anything, doesn't cost you anything. All right, before I jump into GJ, make sure you guys take a second to like and subscribe right now. And we have London open in 3 minutes, which we're going to patiently see how these hourly candles close, which is looking nice and bullish. We didn't get a break above these bodies. I'm just going to mark this area out, obviously, as it's the news highs printed. Okay, now let's go look at GJ. Because of that market optimism, Japanese yen weakness as a safe haven currency, Bank of England support for the UK economy, and of course the UK stock markets, as overall markets have been optimistic and very bullish when you're looking across the board. Have we ever been looking for GJ sells? Even when these pullback phases happen, yes, we take advantage of some of these pullback or corrective phases on the intraday perspective. But have we had any reason to really sell GJ? What have we had going on? Only upside moves, highs printed by buyers, pullback phases and continuations up, or upside moves, consolidation order blocks created and continuations up? Understand? Right? It's the same drill. If I need to repeat this every session, I will, because I want to drill this in people's head, not to counter trend trade without the fundamentals behind it. We've had Brexit optimism. We've had UK economies open up or be in a better state than they were March 2020, initial pandemic fear. We know that the markets always move ahead of the real world because of investor greed, always pricing in events based on the rumors and events ahead of time. We've had a flood of vaccine headlines, market optimism, bullish stock markets, central bank support. This has weakened our safe haven currencies, kept risk currencies bullish after dropping to historical low levels. And if you were a positional trader, or if you were a bank, or if you're running a hedge fund, and you're following the central banks and you're in GJ buys from here, and you're in GJ buys from here, and GJ buys from here, and GJ buys from here, why would you want this greed train to end and this train of financial gains to end without a fundamental catalyst? Right? You wouldn't. You would just be wanting pullback so you can get more buys in. And that's all we've seen. So now, keep in mind, don't forget, it's the end of a 6-month cycle coming up. Sell in May, go away. This doesn't mean that there's massive sell-offs in the market. It just means because of the 6-month cycle change, historically, investors have been known to be more on the sidelines during the end of May. You guys can just go Google that yourself, that little saying. It's a Wall Street saying. So there's a lot of Wall Street sayings I follow, like bulls make money, bears make money, pigs get slaughtered, and those sayings like that, because the relevance is always valid. You know? Now, when I've been telling you guys the fundamentals around GJ and the technicals, what phase is GJ in? And first, what have we had GJ buyers do? And what phase is GJ in right now? We just had London open, no rush. We're still doing our analysis on GJ and other pairs. And remember, this analysis we're doing, you guys can use it for New York session, intraday trades, and whatever else you need. First, number one thing you want to identify is not just the consolidation, but where is the consolidation? Is it not from a new high printed by buyers as well, above the last previous high here? So the market is in that stage where we're not getting that pullback phase and continuation up. We've had a high printed and an order block and consolidation at the highs. Right? Right now, we're just seeing a consolidation, an order block, and liquidity generation at the highs. I can't expect a pullback unless we break below that consolidation zone, which is going to be at the lows when we zoom in of roughly 153.500 area. If we break below 153.500, then I can expect a much deeper pullback down for the new monthly candle to 151 and better risk versus reward buys there. Okay? So what I'm trying to identify to all of you is GJ has buyers and GBP buyers against the yen, which the Japanese yen is much weaker, have printed new highs. The issue is whenever highs get printed and you see a consolidation, right? A lot of technical only traders and retail traders somehow say GJ is too high, a resistance is forming, and they start jumping in sells. Now, the only way you get corrective sells is when you break to the downside of the order block and consolidation zone after failing to break the highs, and then you get that corrective sell play down to a previous demand area where buyers jump back in the market and continue you right back up to those highs and potentially higher. This is what we call a pullback stage, where you have your high printed, pullback, and then continuation back up. But you don't want to start taking sells or corrective sells in a counter trend trade unless you have the confirms of a break below the order block, because what you can have happen is something similar to this or this, where you're having consolidation phases, but once you break above the consolidation, you have a buy squeeze. You don't get a pullback, you get a high printed, a consolidation, and a break above those highs as more buyers enter the market to go up to those supply points. Understand? So now, when you're looking at GJ here, I would only be looking to take GJ corrective sells if we get hourly and 30-minute candle closures below 153.500, which is the lows of this consolidation zone and order block. I would need a break and retest below 153.500 to take sells down to 151. That's the only way I would see GJ in a pullback phase from those highs printed to take advantage of that correction. Otherwise, if GJ continues to bounce around within this higher time frame range, we are not touching it. As a retail trader, this can be extremely stressful and agitating to trade these ranges where you're getting these whipsaws of 50 pips within hours. You could be in profit for an hour and then be completely taken out, break even, or back to your entry, or even a loss within the next hour because we're consolidating. Do you understand? If we continue to consolidate in GJ as it's coming towards the end of the month, we don't want to force any trades in this range as well. We are not going to touch it. I'm only looking for sells below 153.5, and I'm only looking for buys above 154.800 PPL. I'm only looking for buys above really 154.8, maybe 154.5 and 154.8. And I'm only looking for sells below 153.5. The reason why I'd be looking for a pullback to 151, or at least starting to watch, that's a good question, is because this was that last demanded price point around 151 at the lows where you had an order block formed. And from this consolidation and liquidity zone, we had buyers jump in the market and print those new intraday highs. So if we were to top off in this area and get a pullback, I would see sellers drive us back into this demanded price point area, create the monthly lower wick for June, and potentially take us back up. All right. Right now, within this range here, we're not going to touch GJ. Price action is disgusting. It's just ranging. Volume and volatility on GJ has been very slow as well. And you can see we've had nice respect to our psychological price levels. We had a nice bounce from 0.800 as well as 154. Maybe if we break above 0.200, we can get better buys. But other than that, I'm not really going to touch it in this range right now on GJ. Okay. GBP USD is the exact same idea. Fundamentally and technically bullish. GJ and GU, we've had the same exact bias. We've only had buyers print highs and pullbacks or consolidation phases and continuations to the upside. We've only had US dollar weakness, optimistic markets, Brexit optimism. So GU and GJ follow the exact same macro bullish structure. But after breaking out of this corrective pullback structure, you can see here, which was just from after buyers printed these highs, you had this pullback structure as we came back to this demanded price point, which was this last price sensitivity area that took us to these highs. As we broke and retested above there, we had continued buys up to those highs. Now it's coming towards the end of the month and we're sitting at those previous highs, consolidating, doing the same thing GJ's doing. If we continue to consolidate, I don't want to play this range. I'll let the market consolidate. I'll wait for the breakout or more confirms of a pullback. If we notice dollar strength overnight and any bearish candle closures below 1.4100, then we're going to take corrective sells down to at least 1.40 flat. This is the only way I'm taking advantage of sells. If we consolidate in this range, I'm not touching it. Safer buys above 1.422. Okay? GJ and GU make sense. It's the end of the month. GJ's been consolidating. We're seeing better movement on gold, Euro USD, and other pairs as well, US 30, even though everything has been a lot slower for the last couple of weeks, besides some of those nice gold moves he's had. There's no point as a manual trader to fight these ranging markets. It's only breakout trades in this situation because you're having a consolidation formed. Trading the consolidation is just being a fucking retard. So you have to adapt to the market structure that is being shown in front of you. For example, on gold, we weren't just taking breakout trades. We were taking pullback to key level trades. We were taking the order block low trades and then also the breakout trade. So it's just adapting to what you see, not fighting that ranging market and not wasting your mental energy being an idiot. These guys are saying don't show the key levels on the YouTube stream. Stop giving the hyenas so much information. You guys don't, for the hyenas who don't fully understand the information I'm giving you, maybe you guys are new, maybe you guys haven't gone through all my content or understand the fundamentals of the market alongside the technicals, you really do not understand how much information is given out to you. That's not being like, oh yeah, you guys better listen up. You just really don't get it. Especially if you haven't even been trading for a year. Half the shit I'm saying to you is Chinese. So when I'm speaking Chinese to you and you don't understand, the most likely you're just going to get angry or frustrated and say, why do you do this? Why do you do that? I use an EMA. I use Fibonacci. I just use support and resistance. I don't use all this information. Well, guess what? You're probably also trading a $200 account and you probably also aren't doing shit with your trading. We all know that. You know what I mean? I'm just giving you guys the reality because I've been through that trial and error. I've been through that effort and time in the markets. And even though I might be an asshole, even though I might have an aggressive tone, I'm the one giving you guys the information. Like someone just came and said, stop talking down on people. How are people watching this? Guys like you, Samuel Habate, guys like you get eaten up in these markets. Guys like you are krill. You'll be trying for years and years to make money in the markets doing nothing, worried about emotions, feelings, good vibes. Hey, why don't you guys have good vibes? Why aren't they're so toxic here? Where's the good vibes? As you're trying to trade the most corrupt financial markets here. The dollar and money is the root of all evil, corruption, and power. And you guys are worried about good vibes. You guys are worried about the language I use. You guys aren't listening to the value coming in, the information being given to you. Talking about economic cycles, macro fundamentals, micro fundamentals, technicals, buyers and seller strength, historical repetition, yearly time frames to 1 minute time frames. You know what I mean? So please look past my tone and look past my potential angry attitude, I guess you can call it, because the market made me this way. I used to be a nice guy. I used to think everybody was smart. Everybody was hardworking, people weren't lazy. I used to think the markets in the world was fair, And then I started learning about economics, central banks, trading myself in the markets. I started realizing people have commit suicide over the dollar, are constantly stressing over the dollar, working their whole life for the dollar, going to school for the dollar. There's nothing nice about this shit. You know what I mean? So I hope everybody can understand that. You know what I mean? That's all I'm trying to say. So look past the, if I swear here and there, it's just like, have you guys ever seen a trading floor with manual traders in the 90s or 80s? You think, have you seen how loud and noisy and messy it is? You're talking about dealing with your money, risk in the markets. But anyways, you know what I mean? Sorry, I was just checking if the news terminal's going off here. It's been pretty quiet. News has been pretty quiet so far. All right. Yeah, don't forget. Okay? So gold, we're going to wait for those areas of interest. If we get those confirmed, if we just range, we're not touching it. GJ, we're not touching in this higher time frame range. GU, we're not touching in this higher time frame range. I just have to go to the washroom. And then we're going to continue our analysis on Euro USD and USD CAD. All right, everybody? Yeah, you guys got to not worry about the language I use and shit like that. You guys, fuck, man. There's real world shit going on. You got people in the financial markets literally starting wars and destroying a country, but you're mad that I said the word fuck. Like, come on, fam. This is why testosterone levels are at record lows and half you guys got man tits. Lactators. You guys are a bunch of lactators. Leaking tits. But I gotta go to the washroom quick, alright? Give me a second here. Okay, everybody, I'm back. So as we're waiting for our potential areas of interest, GU's right back down that range after failing to break those highs, 20 pips down. Same idea. We're just going to we're only taking EU sells. If we break back below these previous intraday highs, have US dollar strength, and we're looking to target that to 1.22. Otherwise, I have a very strong feeling markets are going to range tonight. So I want to focus more on trading psychology. Obviously, if we come to our areas of interest, we're going to execute based on the lower time frame price action or our analysis. But with the end of May, how we've been ranging the last week, how we had a lot of strong impulsive moves on gold through New York and Asian, I won't be surprised if London's a dud session. So I'd rather focus on the psychology and at least giving back value to the private chat and YouTube. So I'm going to look at, first, a lot of people are still asking me generic questions. What do we got going on here? Okay, so the Capital Hungry YouTube channel. Besides just fundamental and technical information, you guys can go see my viewpoints on really anything. On the society, central banks, masculinity, how this modern society is mentally weak and sick, how the masses are living in a blissful ignorance, everything. Pandemic rant, central bank webinars that were done a year ago, psychology webinars, and so much. So a lot of people are asking, oh, how'd you learn all this? Where'd you do? I've been involved in the market since 2017. And not many people on the retail side focus on the economics and fundamentals. You know? If people like that stuff, then I'll do more of those rants. But I got a lot of hate for these rants that I did. But yeah, you guys have tons of webinars here. You have these trading sessions where it's just pure value. These market update webinars. Higher time frame analysis, fundamentals, technicals, everything. You know what I mean? If you don't want to be a soy boy and you want to be confident like me and be able to lead hundreds of people in the market, then you got to raise your testosterone as a man and raise your masculinity. So I get a lot of hate for these streams. This one's funny, but I post my viewpoints anyways, you know. So tons and tons of content there. Make sure you guys go through that. Like, it's all at your fingertips. The Capital Hungry News Twitter. It's not as many headlines as the news terminal. That's for private members, but you have 15,000 tweets already posted since October 2020. Right? It's obviously more delayed than the news terminal for private members, and it's not as many headlines. But Forex Factory and a lot of these websites, they source from our news Twitter. And then the Capital Hungry Free Telegram Analysis channel. You can go to the start of this channel and see my trading progress, analysis, everything else from 2019 to the current day, and you'll learn more than anywhere else. Because a lot of people are asking about the resources. The private chat, where you get access to like session alert reminders, other members analysis, key level price alerts, and everything else. It's just too much to describe in the private chat. That's for Capital Hungry Lions anyways. Okay. Now, gold, we're just letting it do its thing. We're waiting for 1902 or above 1906. GJ, we're not going to touch. GU, ranging. Euro USD, ranging. UCAD, an absolutely disgusting intraday range. And it's coming towards the end of the month. Do I have a course? No, I don't. Sorry. Within the Capital Hungry private service, you get access to the Capital Hungry webinar vault, where these webinars here aren't on my YouTube channel. These are only for private channel members that teach everything I've learned from psychology, fundamentals, and technicals in about 50 plus webinars. Purely educational webinars with specific topics from like economic impact, sentiment, everything. This is only for private channel members. So I don't have a step-by-step course, but this is a part of the private channel service. You guys can just check that out on the website and shit. So no course, sorry. Yeah, you won't see webinars like this in any marketer's course. They don't even know what the half this shit is. They don't even know what 90% of this shit is, to be honest. They'll have no clue. Okay, so what time is it? We might see some more volume coming in around 3:34 a.m. Eastern. Right now, we don't have any execution points. Let's just quickly scan out our news terminal because we don't have any economic events. Let's just see what news headlines we've had since London Open here. Tokyo 2020 President. Olympic preparations are still ongoing. So I guess Olympics are still going to be active. Not really impacting too much. Syria presidential elections. European Air Safety Agency says advises foreign airlines to avoid okay, yeah, all that sanction stuff going on. So far, no economic events and not many headlines as well. Let's see if we get that pullback and how the reaction at 1902. And GJ, obviously, we're not touching. Okay, so let's use our time effectively now. Remember, I got 3 screens open. After we do our analysis, after we identify our price points of interest that we're looking to execute on, don't just mindlessly stare at the lower time frame of the charts. Set alerts, patiently wait for those entry points of areas of interest, and then do other things. Read your news. Go back test and do analysis on another pair. You know what I mean? Have something else going in the background, because if you're just mindlessly staring at the charts like a zombie, eventually you're going to be seduced by the market into forcing a trade that's not even there and going against your trading plan. So keep your, as we're looking for execution points for that 2 to 3, 4 hour window, keep your mind active. You know, this is from Reuters Icon Terminal. Through Capital Hungry, I have a contract that is $20,000 a year with Reuters Icon to have access to their data API. It's similar to a Bloomberg terminal, but Reuters is a bit cheaper. Bloomberg is a bit more expensive. You know what I mean? Yeah, you guys can see that here. This is just the news application. I just dragged it over. And we don't have any economic events tonight. You know? You can only broadcast and share the information if you have access to the data API. The most expensive part of the Bloomberg terminal or the Reuters Icon terminal is the data sharing API access. For example, all of you guys as individual retail traders could use a third party Reuters application called Sakim, what's that called? Meta what? There's another company that has a contract with Reuters where they license off basic Reuters terminals to retail members for $100 a month, but you only get specific functions and you do not get access to a data API. So you're not supposed to be sharing that information through that licensing. You know what I mean? Yeah, Zenith Metastock, that's the one. So through them, they have a contract as well with routers where you could pay, I think it's $100 a month for the basic add-ons and just the news and stuff. And I think you can add further packages on top of that, but you will not get access to the data API. So you can't export any information, etc., etc. You know what I mean? No, the Bloomberg terminal is completely different. That's very expensive. So mainly the most expensive part is the data itself. No, I don't subscribe to News Squawk because, like, I just told you why. Okay, so gold, we're gonna watch price action if we come to 1907 area. Really here, we're still obviously bullish bias. If we do break above these highs and have continued momentum, nice 50 pip range to 1912. GJ is just ranging. We're not gonna sell. We're only gonna sell if we come below 153.5. Only buy above 154.5, 154.8. GU ranging, Euro USD ranging, USD CAD also ranging. Just so we don't waste our time during the stream. Is it actually pronounced Reuters? I thought it was routers, like a modem router. Actually, that's not even the right fucking word. I'm the retard. I thought it was routers. Whatever, man. Tomato. You get what I'm saying? That fucking Reuters. Make me sound like an idiot now. But anyways, let's use our time effectively right now so we don't just mindlessly stare at the charts. Gold, we're going to keep an eye on here as we're approaching these 1 minute highs. If we get bullish candle closures above these 1 minute highs, I'm looking for entry points. As long as we don't if we get a bullish close above for entry points or the retest candle and fail to engulf back below and continuations up in that sense. If we break above but you see bearish closure on the 1 minute right back below the 1 minute range, then we're not buying gold yet. It's not ready yet. All right. No, Samuel. Samuel said if you didn't buy gold 3 months ago, you missed the trade. What the fuck, bro? So what about here? Here. What about all these buys? What about all that? What about all the buys that I've taken over the months? All gold buys. The only losses I took, big loss, was trying to take a stupid gold sell or rushed gold buys. You know what I mean? 25,000 the week prior, gold buys. Before that, 15,000 in the day, gold buys. Live, gold buys. That 44,000 week, gold buys. The only losses I took were rush gold buys. Damn, those are Daniel Savage days. Yeah, that's about it. In the last, this is only over. All those trades are only over the last month and a half. Yeah, that's the same. This is the full. Where's the full slip? See, the only Only stupid trade. This was an accident. This was a big accident. Entered a 50 lot. Holy, I closed that. I closed this instantly and still lost $4,000. Yeah, only gold buys. I've really been taking only gold buys. What's this? Fucking gold buys. Gold buys. Gold buys. Live gold buys. What's this week? Full trade, 25K. Majority of the trades, gold buys. One gold sell. Mainly gold buys. You can see the live accounts, obviously gold buys. Gold buys. You know? Carl, yeah. Bought some gold. All right, so markets are still ranging. Let's look at everybody's charts. You guys send me charts and ask questions. We're going to spend the next 30 minutes answering questions, looking at people's analysis and charts. This guy sent me the Reuters pronunciation link. Nyan, probably. Adam, sure. A loss you took earlier. Yes, you entered during pre-London. Like pre-London open before 2 a.m. you entered. You have a bad habit of entering before the, you've done this before too when we were talking about this, but you have a bad habit of entering before the session volume times and then getting caught in the pullback that comes. You know what I mean? Now, when we're looking at price action and what I tell you guys in Capital Hungry, right? If you entered here, personally, to trade manage better, what candles could you have exited on here? Because you have this bearish candle closing back in the range. Just so people can see. You have this bearish engulfing candle back in the range, this bearish candle, this bearish candle, this bearish candle as well. The whole point of the 1 minute time frame and the trade management is so you don't have to deal with this entire downside move. You know? So the issue here regarding the loss was that you entered before London open hours where we had those pullbacks pre-London. And the entry made sense, but you didn't have confirms literally after this candle here. This candle right here, you didn't have the good confirms anymore. You know what I mean? So one thing is the timing, and another thing is the objective price action. You know, within Capital Hungry, when we do our Zooms, if we took EU buys here, we would have accepted that loss after this bearish candle for maybe 1 or 2 pips. And we know that accepting that loss at 2, 3, 4, 5 pips, when we go for 1 to 3 RR trades and for 20, 30, 40 pip scalps, we know our win is gonna outweigh that loss. This guy said 1 minute price action is fucking no thing. He said 1 minute price action is a waste of your time. Capital Hungry Hyenas and Lions. How many times during these free sessions or Zoom sessions have I walked you guys step by step 1 minute price action for entries and straight to take profit points as well? How about I don't tell you? How about you let the audience tell you? How many times have we taken scalps during our London sessions over the YouTube days or in the private chat, walking through step-by-step price action to trade manage and have minimal losses? When we get the confirms at our entry and we execute, we literally go step-by-step 1 minute price action. Yeah, Jesse. Look at Jesse here. Jesse sent this analysis ahead of time to our members of GJPY scalps. And this is the 1 minute price action. You know, so it is what it is. That was very nice analysis, by the way. All right. Okay, wait, let's look at gold here. It looks like we're going to get our confirms for potential buy scalps with this 30-minute candle if we can break above here on the 1 minute time frame as well. So we're going to keep an eye on gold here if we get some bullish closes above in a retest or the breakout entry. But also we're going to take a peek at the charts. So I'm going to take a look at the charts you guys sent. Any further charts as well? What made me drop down to the 1 minute time frame to take entries? Because I stopped using indicators way back like 4 years ago when I first started. The reason I stopped using indicators is because they were all lagging behind price action itself. And there's nothing that's going to tell you more information than price action. So if you're scalping in intraday trading, what is the fastest time frame to view the action of price in reaction between buyers and sellers? Well, for the majority of us, it's the 1 minute time frame. So once you identify areas of interest, whether it be based on higher time frame levels, historical price points, market structure retest areas, you're going to see the strongest reactions on your lower time frame at those areas of interest. I want to look at gold here. I want to see if we can clear above these 1 minute highs here and start to get some potential scalp buy entries. What I want to see is a stronger bullish engulfing close, and then having the following candle either do a retest slower or be about half the size of the bullish candle and then just continue right back up. But right now we don't have any confirms just yet. It's just reacting to those 1 minute highs, so we're going to be patient. Oh, here we go. Better bullish candle. Yeah, sorry, I am going to check your guys' charts out. So now what I would want to see is either a cleaner breakout and retest, or see a bearish candle that's maybe half the size of the body, closes weak bearish that way, and then a bullish continuation to the upside. If we get any bearish candle closures back below the range and marked out area, then we're just going to stay out of gold. I'll look at crude oil if you send me a chart. You know what I mean? This is a new 15-minute candle. I would like it to create a lower wick and retest our area of interest. Okay, so I like the ideology behind this because you're playing that order block we identified, and you're pretty much playing that consolidation zone and range there, which is fair and valid. as long as the US dollar is still bearish and we don't break below these previous lows, which is a good stop loss entry area, this is a pretty favorable trade and a good risk versus reward you got marked out as well. I just personally do not want to trade this consolidation zone, but if we don't break below these previous highs to the left and continue to respect that support, we will have that range back up to these highs as long as the dollar is primarily bearish. You know? So that, I do agree with your analysis. We just personally didn't want to trade and force any trades in this range, but what you're seeing for makes sense. Oh, you already closed it? Oh, okay. Oh shit, that was a perfect retest here. 15-minute lower wick as well. Now what you need is bullish candle closures above these bodies to continue the scalp out. You don't want any bearish candle closures below this range. You just want continuations to the upside now. And you want bullish closures above these bodies to signal more buyers' momentum. If you don't close above these bodies, there is potential to range and then continue up or dig a bit lower there. But I do like how that 15-minute candle made the lower wick and retested exactly where we wanted. And I do like the price action we're getting with this breakout as well and the US dollar weakness. So very solid bullish candle close here. What you want to see now is this bullish candle not get engulfed. You want to see this candle pretty much make a wick at this price sensitivity area, continue bullish or close weaker bearish, and see more consecutive bullish price action to the upside, giving us that squeeze up. The hourly candle's closing in 12 minutes. Hopefully we can get a scalp squeeze in if you got those entries beforehand. Now, same type of idea. I just don't want any candles to engulf below these bodies. Man, you guys already got a 6 scalp. Close some partials if you got the entry down here. Close some partials as a scalp with that little impulsive move. If you got any, that's like 20 pips as a partial close for a quick scalp. But I want to go to 1912. Let's keep watching it. Price action still looks good. Just close some partials to secure some profits for yourself. What you want to see now is even if you get a bearish pullback to these highs, as long as we remain above these candle bodies, and specifically here, it's still bullish bias and the price action is still very solid as well. Remember, during these sessions, we scalp and look for those scalp entries primarily. If you took that exact entry, you would have got a roughly 22 pips. But even if you got in later, you still would have got 10, 15 pips right now. Price action is exactly what we want to see so far. Now we are having a few consecutive bullish candles. If we get a bit of some bearish pullbacks, don't be hesitant if you're holding your runners. We just don't want to have any crazy bearish engulfing candles. If you get some minor bearish pullbacks and then continuations to the upside, don't worry about it, because you want to look at your bearish pullbacks in relation to your consecutive bullish candles and price action. Where's the guy that said 1 minute chart doesn't work? Where the fuck did he go? Did it not just do exactly what we said with the 1 minute breakout, retest, weaker bearish candles, bullish candles? 9 minutes till the new hourly candle. So here, now that we're getting this little pullback, it's okay. We just don't want it to like break back below this range here. It's almost going to where we expected it here so far anyways. Now this is a potential pretty aggressive candle close here coming. But in relation to the bullish push, I'm not too worried unless we get bearish closures below here. If you get bearish closures below here, worst case, your scalp will get taken out risk-free. But let's just watch the price action now. Hey, you guys be watching streams where 10 pips, you guys are fucking screaming in the chat. This is like a quick 20 pips with a late entry, almost 30 pips on the good entry. Be cautious, 8 minutes until the hourly candle closes. Follow the yellow magic road. That's it. No, but actually, just be cautious because we have the new hourly candle. Now, if you need a continuation on gold, you need bullish candle closures above here. If we don't get bullish candle closures above here within the hourly candle close, then we will get a deeper retest the new hour back to your entry. Okay? So what you need now is over the next few minute candles is bullish closures above these bodies to signal more buyers momentum so we can take a further squeeze up. I do like this I do like this weaker bearish candle, bullish potential engulfing close we're going to get here, but you need closures above these bodies to signal more momentum. If you guys are in profit here still, it's still a good area to secure as some scalp profits. It's still potentially 25 pips and even 15 pips. You know what I mean? Because we have the new hourly candle coming up as well. It was a good squeeze we got. And we haven't broken above this price sensitivity area just yet. And if we get closures below these bodies, you will get a deeper pullback, something like this potentially too. Just a new 5-minute candle right now. Probably going to make a quick lower wick. Worst case, any runners you have are risk-free. We need candle closures above here to continue the buyer's momentum. Any breaks below these bodies, you're going to get deeper retests. Alright. 4 minutes till the new hourly candle as well. So obviously be cautious of that making a lower wick too. But hey, 1, 2, 3, 4, 5, 6, 7. 7 minutes for 15 to 25 pips. That's the whole point of these London sessions, scalping sessions. We do intraday analysis, higher time frame analysis. But through our London session, we practice our execution with lower time frame price action as well as scalping too. So members can make some profit, also learn with execution. So you could have got anywhere from 20 pips to 28 pips. New hourly candle in 3 more minutes. It's not like we're seeing any crazy engulfing bearish price action. We might see a quick spike down in the new hourly candle. I like how this hourly candle is potentially closing above our price sensitivity area of interest. Come on, yo. How many people we got in the chat? 200? 400? Let's get the likes up to 400, man. Full fundamental and technical analysis. Full 20 pip to 30 pip scalp call live with analysis ahead of time. Entries, exactly what to look for. And it's still active too. News terminal. Psychology, technicals, fundamentals. Higher time frames to lower time frame. I honestly would have had a pretty tight SL around 1906 in this area, 1906.5, because we're entering at the break above. And if we had any engulfing closes back below the range, I'd already be looking to exit. You know what I mean? Which is discussed in like the webinars and stuff like we always talk about. My stomach is growling. I'm hungry. Like, not like for the trades, like actually for food. People are like, capital hungry? No, just for food. Regular food. Hourly candle closing in 40 seconds. Bro, I don't know what broker has 5-10 pip spread. You got some dusty broker, Rainer. Pacific Union maybe has a 1 to 2 pip spread on gold. Sometimes even less. What do you think scalpers trade? Scalpers trade 10 pips. Scalpers trade 10 points on US 30. You ever heard of Big Al? These guys don't know about Big Al. You guys watch Raja streams or any of the other streams where they literally will scalp like 10, 20 pips and then secure profits. So if this is a new hourly candle. So it doesn't have an upper wick yet. It's making its lower wick like we expected. We just wanted to make the lower wick and turn bullish and continue up. Even if it comes down to like 1908 again. It would be ideal if that's the lower wick and we just continue right back up. But if you don't get any bullish candle closures above these bodies, there's no signs of continued buyers momentum to continue back up either. $1.5 spread? That's 15 pips, bro. Hey, we got our quick little squeeze. Can't be angry. When we were expecting the markets to range, when GJ's ranging right now, GU's ranging right now, Euro USD's ranging right now, We still got a nice little squeeze on gold with our pre-planned analysis and exactly what we were looking for in the lower time frame. Anywhere from 20 pips to 30 pips. And potentially more if we break above here. After that little squeeze, volatility and volume really slowed down. You know, gold candles just got microscopic now. The analysis is still valid, but you know, that little squeeze was perfect in the few minutes. I give you guys the best advice to secure some partials too. It was right before this bearish engulfing candle there. Man, my stomach is growling. Oh, Samuel, you're asking me some questions now? You're asking me fundamental questions now? I thought this was a toxic stream. I thought, why would anybody be listening to me? I thought I was the asshole, mean, rude. Why are you asking me questions now, bro? Yeah, sorry, I was just on my phone for a second. Yeah, worst case, we're expecting this pullback here anyways for the new hourly candle. Worst case, any runners you have get taken out risk-free after you secured some partial profits at either 20 or 30 pips here, if at the peak point. But as long as we still remain above 1908, potentially 1907, this bearish price action is a lot weaker compared to the bullish pushes we've had. It's just the new hourly candle making that lower wick so far. So unless we see an engulfing candle that comes all the way back down the range, I'm not too worried yet. And we've already secured partials with that impulsive move anyways, you know what I mean? So let's just see. We're just watching how it goes now. Like if this closes, like this candle might take you out, worst case break even. But if it doesn't break our area of interest, then we're going to look for actual re-entry points as well here. See how it's retesting that high so far? If it closes back below, then we're out. Trade's done. You're not taking any more re-entries. You're not looking to scalp it again. You got your 20 to 30 pips. Markets are ranging. End of the month, in and out. Look at this. Look at this fucking shit. Look at this. Look at the 1 minute. It's beautiful. Yeah, worst case break even, but you know what I mean? That's a pretty weak bearish candle close. If the next one makes a lower wick and still holds above this zone. But yeah, otherwise we're just keeping an eye on it. We were already expecting ranging markets and it's the end of the month, so we're not forcing anything here. All right. Okay, so let's go focus in as volatility and volumes are slowing down. That scalp played out nice. Worst case, runners got taken out risk free. GJ still ranging, GU still ranging, Euro USD still ranging, UCAD still ranging. We didn't touch it. We didn't force any trades there. We got what we can with gold for 20 to 30 pips and followed our preset analysis. All right. Give me a W in the private chat or a W in the YouTube chat if you guys got to catch those gold scalps for anywhere from 10, 20 to 30 pips. Following exactly what we are looking for. As clean price action as you could get in this little quick squeeze stretch, scalping in and out of the market. Everybody that put a W better like the stream as well and share it around. All right. Don't overtrade. Don't over leverage. Don't chase that win with another win because it's coming to the end of the month. Take whatever you can, those jabs at the market, and come back to attack another day. The market's always here, but your capital may not be. Mr. 66, I did not take any trades today. I traded already earlier in the week, which I sent to the private chat, and those trades I was showing you guys last week. And it's very hard for me to do this live stream, talk about 5 pairs, do analysis, give out live trade ideas, answer people's questions, look at the private chat, look at the YouTube audience, enter trades, trade manage, and do all that shit myself. You know? All right, now let's use it's 4:10 a.m. We'll keep this stream going for another 20-30 minutes. Yeah, but Raja looks at one pair and has 10 other people sometimes talk with them as well. And it's not breaking you guys one step by step, 1 minute price action and shit. You know? Everybody always hating. Fucking Raja still does it. Like, what the fuck? I just told you I didn't take a trade tonight. Why do you care? I showed you the trades I already took earlier in the week and the previous days. You can see it in the chats. I don't even trade every day to begin with. I only trade Tuesdays, Wednesdays, Thursday. All right, Roman said Raja taught me well. Get the fuck out of here, bro. Raja didn't. Does Raja still tell people I was his best student? Because I was never his fucking student. Yeah. If you guys took that re-entry, that's on your accord. When we were talking about the break and retest of that area, if you guys took this re-entry, that's all on your accord, in your doing. I personally didn't advise it. If you took it, well done. But obviously you got to look for the same types of confirms as per price action. Now I'm going to spend the next 10, 20, 30 minutes to answer people's questions and look at charts. All right, everybody. Let me just quickly scan the headlines here. Obviously, headlines should have been quiet. That's why most of our currency pairs have been ranging. Did anybody take another re-entry on their own accord without having me to without having me to hold your hand and fucking balls? Good job. Pretty nice quick scalp again. It's almost 15 pips again. 10, 15 pips again. Obviously, I'd be watching these little price sensitivity areas here, and the previous highs, but yeah. You guys are hyenas if you took those re-entries. Hungry. Don't get cocky and greedy and start chasing that dopamine hit. Take what you can and just fucking enjoy the day now. How do I get those key levels on the chart? Secret. Princes of the Yen was awesome documentary, eh? Just Dom. What's another one? Fuck, what's that other one? There's another one I should suggest to you guys. I forgot it now. If you guys watch Princes of the Yen, there's another good one. I forgot the name now. My mind just went blank. But Princes of the Yen is an awesome, awesome documentary. Come on. Who said 1 minute price action is messy? Who said 1 minute price action is messy or noisy? 97% owned. Yes, that's a good one too. 97% owned. Thank you. Thank you, thank you. I sent that in the free chat as well. Go watch Princes of the Yen in your guys' free time, and also 97% owned. HFX, hey Jeevan, just had one question, please. How do you think these digital currencies will affect the Forex markets? Please clarify what digital currencies. No, the levels are not from the candle closes. 6-6 is incorrect. 6-6 thinks our key levels are from only like these hourly candle closures and shit like that. Our higher time frame key levels are based on historical price points. When we will try to buy or sell, do you tell us, sir? Look, I told you guys the hyenas. If you guys got buy scalps again, I would take some profits again at these highs and then only extend if we break above. All right, same thing. Like you got another 10-20 pips again, and then let your runners go to 19-12 if we slap that. And this is exactly what we were talking about with the, if you didn't catch the impulsive price action scalp with this hourly candle, we use momentum, you still could have caught the exact same play with this breakout and retest. Right? I would like to slap 1912, but we're starting to top off here just a bit around like 1910, 1909, so just be cautious of that. The digital pound, digital dollar will be no different than current cash systems. It's just the central bank saying, hey, we're digital now. For example, when the Federal Reserve, or you guys see these Main Street headlines of the Federal Reserve is printing out more US dollars. Nowadays, it's just a figure of speech. It's like another Wall Street saying. Remember how I was telling you guys those Wall Street sayings? Sell in May, go away. Bulls win, bulls make money, bears make money, pigs get slaughtered. Yes or no? The whole printing word is false nowadays. It's just entering. No, these key levels we have been. I'm gonna prove you wrong right now. Do you guys see these key levels right now on your screen? 1912, 1876, 1883, 1852, 1855, 1876. Do you guys see these key levels? Do you see the reactions? Yes or no, right? Come to the mainstream chat here in our main feed. Search gold key levels, not for you fuckers. This is from July 8th, 2020, you piece of shit. Same levels. 76, 83, 1990, 1897, 1902. Same levels for a year we've been using on gold. So you're fucking wrong. Just like you were wrong about 1 minute price action, you're also wrong about how these levels are mapped out. Has nothing to do with these intraday candle closures. These are, look at the date here. This is July 18th, this is July 8th, 2020. Gold key levels for our private chat. Using, oh shit, sorry, can't show you that secret there. We've been at it in here, all right? You guys just don't get it. You guys just don't get it. This is what happens when you got this much information in your head. Did you guys who listened to me and took profits at the 1 minute high? Secure some partials again. Who listened to the G of instincts? Purple. Some guy named Purple Gorilla said, you don't have to be so vulgar and aggressive. Just chill, man. Listen, I'm going to explain this very simply without roasting anybody. Being an audience member and being the one in the hot seat is two different situations. You're sitting in your fucking dirty ass Fruit of Looms in your chair, sweating away with your armpits fucking disgusting and sweat under your man titties, watching my stream with not a worry in the world. Nobody knows who you are. Nobody gives a fuck about your existence. There's no pressure on you. Nobody's depending on you. You're not leading anyone doing anything. You're sitting there watching. Understand that. But when you want to be in the hot seat like me, and you want to be able to give financial market information in the most corrupt, greedy markets known to mankind, the most corrupt system known to mankind, you need a certain level of knowledge, experience, and confidence, as well as masculine aggression and leadership to take that role. If you want to be feminine, if you want to be soft, if you want to be weak, you will only ever be in the audience. It's just the nature of the beast. Within our societies, within history, the strong, the aggressive, the masculine have always conquered the weak and continue to do that through historical repetition. All right? So understand, if you guys want to, anybody who's complaining about my language or anything like that, send us the link to your stream. Put yourself in the hot seat. Let yourself lead hundreds of people on YouTube for free, or hundreds of people that are paying you, giving them consistent financial market information day in and day out, month after month. To do this, you need a level of confidence and leadership that the average person does not have. To the majority of people who are broke, weak, fat, and ugly, this is seen as cockiness or anger because they don't know how to handle someone with this much fucking energy. They've only had people give them surface level conversations. Hey, Bill. Hey, Joe. How's the weather? Oh, yeah, still good. Well, yeah, fucking lockdown, you know. All right, see you later. That's all they do. They got nothing going on in reality. Just day-to-day surface level conversations amongst other fat losers. Other fat, low testosterone, big titty losers. Unless you're a female with big titties, then you can make a lot of money in this world. But if you're a man with big titties, if you're fucked, you're done. You know? So please understand that. No, feminine does not mean weak and soft, but there's difference between masculine traits and there's difference between feminine traits. Femininity and masculinity work hand in hand, yin and yang, a perfect, beautiful golden balance. Today in the modern society, that has been flipped on its head. Women are turning into men, men are turning into women. And I'm not even talking about trannies. I'm just talking about like mentally. Why don't you guys all Google right now, testosterone record low, testosterone levels. Studies show that testosterone levels have been declining for decades. Declining 1% per year since the 1980s. That's a 40% drop in male testosterone. In 40 years, that's a 40% drop in male testosterone. No, I'm still all natural. I'm probably going to cycle testosterone or anything like that probably in like my late 30s and 40s. You know what I mean? Yeah, anybody who wants to unsubscribe and dislike, take your fat tits and do that. Why don't you hit the dislike button with your titty? Make it of some use. How about that? Use one of your fat rolls to click the button. At least it'll be useful for you there. How about that? Otherwise, lick my testosterone-filled balls and deal with the language and deal with whatever I bring to you. And just be happy with it. Alright? If you want to know how to build more natural testosterone, if you want to know how to change your mindset, guess who's got webinars for you? Watch this. Watch this. Watch this. Watch Society is Hypnotized, How to Break Out. Watch The War and Destruction of Masculinity. Watch The Troll Mindset. Watch The Importance of Masculinity in Society. Watch The Importance of Femininity in Society. Watch Choose One, Growth or Feelings. It's not like I just roast without giving solutions. I always give solutions. I do talk about it in the videos. I literally do talk about it in the videos exactly what would keep your testosterone and masculinity high. What do you mean? There's the exact webinars on it. Someone's like, you don't even talk about this stuff. It's not just about masculinity and about men. It's about female and male balance, working together, hand in hand. You guys are acting like I'm single. I got a girlfriend. No, this is my free YouTube channel. This is just the YouTube channel you guys are watching right now. And guess what? As testosterone levels are dropping by 50% in North America, what do you think China's been doing? As testosterone in the western side of the world is dropping, as men are getting weaker and weaker and losing their masculinity, China's doing the opposite right now. Read this. Oh, now it's not a conspiracy anymore. Oh, China's men are becoming too feminine, so they're taking action with that. Guess what? In 10, 20 years, when all the current CEOs, industry leaders, and people who are in power, they fade out and die in North America, China's going to have continued masculine leaders that are going to see the world as a buffet and say, fuck, let's go raid Canada. Let's go raid over here in Australia. Let's go raid New Zealand. Let's go raid Africa. Wow, I see business here, land here, development here. Let's go take this shit over. Look at all these soy boys everywhere. We're fucking kung fu masculine masters over here. Let's go fuck them up. I'm not tough behind a screen. You can see what I look like. You're acting like I don't post pictures of myself. I think I probably just did yesterday. Did I not? Oh yeah, I remember this one. Yeah, I post pictures and shit all the time. You guys can see me, my workout motivation for you guys. Let me mute it. I'm not some fucking monster. I'm not a juice head, jacked Arnold size. But I do try to promote everybody around me to be a lot more masculine and to get to their genetic peak as a man or woman. Because why not? Life's short. You know what I mean? So I'm always trying to motivate people, give information, tell them to go to the gym, tell them to eat better, meal prep, cook for themselves, giving them fundamental and technical information, my trades. Whoa, that was a good flex. a monster range. That's a pretty nice range. But yeah, people hate confidence. You know, they hate when people are confident, because not a lot of people are confident nowadays because their testosterone level is so low. I don't have any real meal plans. I just like okay. Once you guys have worked out for years, I've never taken steroids or have never gone strictly into bodybuilding, but I've been actively working out on and off since maybe like high school, since I was 16. If you get involved with your own body and your own fitness, you start to learn more and more about what works for you and what doesn't work for you. You know what I mean? So I've never had a set diet plan I follow. I just watch the calories I eat to make sure I don't go into a calorie surplus unless I want to bulk, and that's it. I just try to enjoy it as much as possible. If you get too disciplined in that sense, it's great. But unless you're a bodybuilder, there's really no need for it, because it starts to take away from your joy as well, because you're strictly following this diet plan. You're only eating at certain times. I don't want to be that strict with it, if that makes sense to you guys. So it's not like I still watch what I eat. I still look at my calorie intake. I still actively work out. But it's more based on my muscle memory, what I've learned over the last decade on regarding my body. You know? Yeah, I'd be way too angry if I hopped on gear or even testosterone. So that I'll probably use testosterone like maybe a decade from now, when my natural testosterone actually starts to decline and not produce as aggressively. Then I'll for sure jump on test injections. Hopefully by that point, like I'll just get it prescribed by your doctor, usually at that age, 30, 35, 40s, 45, if you want to. You can always do things to keep your natural testosterone up, but I'm just saying, it gets a lot harder as you age. That's just the circle of life. We're all gonna die someday. The only thing promised to us is death. So why not go as hard as we can through all aspects and levels of life? With our fitness, with our psychology, with our finances. You know what I mean? All right, everybody. So, to summarize, everybody got to catch these gold buys for 25, 30 pips, 2 attempts. Either you got the live entries with me, or you took the re-entries on the new hourly candle close above in the retest. Very quiet night, but we are expecting that quiet night. It's currently 4:30 a.m. Eastern. 4-hour candles are closing in roughly 30 minutes. Asian session is fully closing in 30 minutes. If you guys are trading New York, be cautious that we have some Federal Reserve speakers as well as U.S. crude oil inventory reporting. I want to thank everybody for coming and supporting the stream, showing up, keeping me company. And I'm going to see you guys next time, okay? If anybody has any last minute useful questions, I'll answer it. But other than that, I'm absolutely starving. I'm going to go get a meal in and then sleep soon. Any questions about the gold buys? Why we called the buys? How we took advantage of them? The price point of interest? The price action? We stayed out of the other ranging pairs. We understand the market timing with the end of the month and the cycle change. Don't forget to rewatch the webinar, because we go through a systematic process. We went through our psychological and mental reminders as manual traders. Then we identified what economic events we have overnight that could be impacting what we're trading. Obviously, we didn't have anything, but we still went over that. It's a part of the process. Then we identified macro and micro fundamental points, the timing of the market at the end of the month, the historical repetition of the 6-month cycle change from May to June, and the sell in May, go away effect with investors on the sideline. Central banks creating a lot of indecision and ranging as they're shifting their sentiment, and macro optimism still active. We went through analysis on gold, GJ, GU, Euro USD, and UCAD. Our currency pairs were primarily ranging. We didn't touch it. We didn't stress out. We didn't force trades there. Gold, we had price points of interest. We got those confirms with those price points of interest, either with the breakout entry, the retest entry, the bearish candle entry, or the break above bullish candle entry, or at any of these entries at the hourly candle retest. We noticed based on 1 minute price action, initially these highs were created, but I advised people to close at 20-25 pips as a scalp anyways. The re-entry went up to those 1 minute highs. Same advice about closing profits, because if we don't break, we're going to continue to range there. Okay? If you guys can do me a favor, maybe within 10 minutes, this stream will be saved and you can actively comment on it. Do me a favor for the YouTube algorithm and comment on it. Comment what you enjoyed about the streams, what you found funny, what you like, what you want to see from me. You know? Alright, everybody. Private chat. I'll see you guys either at late New York or Asian session. And obviously, same idea. If you guys can send a comment on the stream once it's saved. YouTube audience, hyenas, capital hungry hyenas, thank you guys for coming. I appreciate the support. Don't overtrade, don't over leverage, and enjoy your night, okay?